Hey guys, just going to do a quick trade recap on a few trades that I took yesterday. Um, First one I'll start with is the Aussie CHF. It was just a simple kind of a trend continuation trade. We're here on the hour chart, and we have this strong impulse move with a couple little consolidation periods in it, and we came into this larger corrective phase here. Just your typical bull flag pattern. So what I did was I was looking for a way to, get in on this trend or this consolidation phase and essentially just take price back up to, the highs that it was. The typical fashion with these is, you have an impulse move, a corrective phase, and then a trend following. Usually breaks in the direction of the trend, and if you're correct, then the base of this structure generally holds the bottom of the flag, wherever that may be. Certainly the pole should hold as support if price were to reach down there, if it is a true corrective phase and then a trend continuation. So the first thing I did was when price broke up and started, making its way back down, forming this corrective flag, if you will, I was looking for, a good area to get long. So I had a couple of levels here that I had marked. I had this kind of trend line that took the last consolidation, or one of the last little consolidative phases here, and connected it with these little high wicks right here. That made a little nice little potential support level. I also had the fib. If we bring in our Fibonacci tool, take kind of the impulse leg here of this flag, the 61.8 is right there. And then what I typically like to do also is see if I can find an extension target that people are using, counter trend traders are using for profit targets. And once we made this high in this retracement and our lower high here and started moving back down, I generally like to look for a potential target where people are going to be taking their profits at. And I saw that it was respecting these fib levels as well. We have the market open here, this large bearish candle that created this low retracement point, and then a quick bounce back up, bounced off the 61.8, and then retraced back down, and then respected the 78.6 before breaking this market open, or this market low, Sunday market open low point right here. And we can see right on the 61.8 of the impulse leg is the negative 61.8 profit target that people typically use. So we have our our crossing trend lines there. This was the channel bottom, or the potential channel bottom. We have the 50 EMA on the 1 hour chart right there as well. Actually pulled in a structure level from the daily chart way back, months and months ago, and it was holding pretty well as well. I put a limit order on. I watch my daughters during the day, and they can be pretty attention demanding, so I don't get a lot of time when I'm watching them to sit and watch price. I try to do as many manual entries as possible, just because you can sit there and watch price action. But I felt this level you know, was a good level of confluence and was willing to, you know, put a limit order on. I put a limit order at 76.80, just above all these levels, you know, to ensure a fill with spreads and, you know, that type of thing. Obviously I could have put it down closer to, you know, the trend line level and still gotten filled. I took about maybe 5 or 6 pips of drawdown because it did go directly to this profit target and the 61.8, the 50 EMA, and that structure level, pretty much to the pip before starting its way back up. So that's where I entered. My stop, I felt, you know, if this was going to be the channel bottom, we would retrace back up and it would hold. And certainly this little consolidative area before the impulse move would typically hold. I could have put, you know, to be more conservative and safe, you know, I could have put my stop below below these lows here, but you know, I felt this was a strong impulse move. If price were to get kind of back down around here, the bears would try, or the bulls would, you know, the buyers would try and step back in and try and defend this area. And you know, I had all these things in the way for price to have to get through before it could even approach these levels. So I put my stop there. It was about a 16 pip stop, and essentially I was just kind of targeting the top, you know, the top of the channel and the top of, you know, we kind of have this little channel top. I was just kind of targeting this general area. Momentum just kind of carried it up. You know, I don't typically get greedy. I could have looked for an extension higher. You know, these extensions are still very likely to be hit, but you know, as you can see, we've had a few impulse moves and corrective phases already, and this is a pretty deep one. So in my opinion, that's kind of telling me that this may be running out of steam. We're also kind of starting to get some divergence here, you know, on the 1 hour chart. I'm not sure how the higher time frames look, but so that was this trade. That netted, let's see, just about 28 pips. Nothing too spectacular. The next trade I took was, let's see here, an Aussie dollar trade. We are on the 1 hour chart, and same type of little thing here. Kind of have this little trend line here and a squeeze that had been happening from last week that was broken on Friday, so I was just looking for a simple trend retest. Kind of like in the last trade I just explained, you know, we have this little consolidation zone before a breakout for a strong impulse move up. And I figured that if price were to get kind of down around here in this general area, you know, the buyers would kind of step back in and really kind of defend that area if this is a true trend continuation move, which it ended up being. In addition to that area there, you know, there's a couple little, you know, little support areas, you know, these all kind of hold more or less, and then it kind of reverses its roles a little bit. So, you know, it held as support here several times, and then it held as resistance here, and kind of was chopped back and forth a little bit, and then finally the last time it held as resistance again, or support rather, when it was broken, and then obviously again. Again, I put a limit order on this here. A couple other things I had here were some fibs. You know, it was right in between the 61.8 and the 78.6. We also had a little profit target extension for people who like to fade these types of trades. Right at the top of this little zone here was a negative 61.8 profit target that people tend to use. I actually didn't anticipate price to penetrate this level as deep as it did, but you know, inevitably it did end up holding, and the 200 EMA for the 1 hour chart was right there, as well as this trend line. So I nearly got stopped out, but I didn't, you know, because I had chose to put my stop. It was only about a 15 pip stop on this. I chose to put it below this 78.6 and this little consolidative zone here before the impulse move started, and below this, you know, this trend line. So if price did get down there, which it did to the pip pretty much, that would have been your perfect entry right there. You know, I had those things in my favor as well. 15 pip stop. I took profit on this for about, oh, that's the wrong one. So as you can see, I took profit on this AU trade for just shy of 40 pips. Altogether, these two trades netted me about, oh, just shy of 70, around 67 pips or so, give or take a pip or two. So that was these trades. I'll do another recap on a couple the other two trades I took yesterday. And this was the analysis behind them, why I entered, and kind of, yeah. So let me know if you have any questions.